with the earnings season almost done, investors are shifting gears to the economic picture. Joining us now is Shayna Sissel. She is founder and CEO of Banríon Capital Management. Shayna, great to have you back with us. And you join us a day ahead of CPI. There is a big focus on the economic picture right now, especially after that weak jobs report that we got just over a week ago. When you think about the Fed's dual mandate, the needle that they're trying to thread between inflation and, of course, the employment picture in America, how does that translate into what you're doing in your portfolio?
I mean, we're an alternative investment specialist shop, so we have a bias to that. So as much as this does impact how we impact equities and fixed income, and obviously it supports sort of our message, which is that you should have an additional diversification benefits from alternatives because of the low correlations and typically less impacted by these types of headlines. All it really changes for us is sort of where we're putting money in the alternative space. You know, there's a number of products out there that are focused on inflation-related things that have things like real assets and stuff of that nature in it. And so those are the types of things that you might see us tilted a little bit more in our portfolios. But overall, I think the bigger picture here is understanding, the Fed mandate, whether or not it's likely that they will cut sometime this year. I've always been of the mindset that I didn't think it was as likely as many people thought. And if it did happen, it would be in the back half of the year. And I've proven to be correct on that. But overall, I think that you really want to pay attention to this inflation number. CPI is not the number that the Fed pays attention to. They're more concerned with PCE, but it will give us an indication of sort of where that might be trending.
Well, as many Fed officials have said, Shayna, we are in a period of transition, and often the economic data is complicated and difficult to capture in those periods. We're going to get, to your point, another CPI report. We'll get another labor report as well before the Fed decides. Is that even enough to understand and to have conviction that the Fed will be cutting and that they need to cut?
Well, we got to remember one of the most important parts of this is that because this is all lagging data, so this is stuff that happened in the past. The Fed is making its decisions based on past information, past progress on these things. It's really hard for them to get a handle on what might be happening in the future, which is why the Fed tends to be late when it makes decisions. And so everything we're looking at needs to be looked at through the lens of the fact that, what is this telling about what is happening in the environment today, which is a little bit harder to capture. And I think that's what the Fed is really wrestling with right now. The impact of the uncertainty as it relates to tariffs. There's always new headlines, as you've been pointing out throughout the show, coming out every day. And these things and how they're going to impact future data is really the crux of the problem.
Well, Shayna, I also want to get your perspective on what we were just talking about last hour, and that is 401ks and the idea that we could see private equity, private assets, and crypto move into 401ks. You're an alternative shop. That's your specialty. Would love to hear your reaction on whether these assets, these instruments, are suitable for retirement plans.
So it might surprise you to hear me say this, but I am not the biggest fan of this decision. I also think that it's not imminent. There's way more questions than answers as it pertains to this. For example, how exactly does this work? You're talking about private equity, private credit, things of that nature that have subscription documents and qualified and accredited investor hurdles. And how do you follow the know your customer rules? The fees on this are very high. And, we just went through a period over the last decade where the Department of Labor was putting out guidance about fee compression, which has actually hurt the asset management industry, which has pushed them more towards alts as it pertains to the fact that alts just typically are more profitable and have higher fees associated with them. So there's some of the industry that I'm in, which I love, taking advantage or trying to find ways in which to make more money. I mean, that's the nature of the beast. I don't love this. I think there's some complexity here. Crypto and 401k plans. I kind of get that, but I'd like to just point out, for the most part, you can't get access to ETFs, interval funds, things that to me make more sense. as a potential step towards this for your 401k investors and plan participants, plan sponsors have significant risk in how they implement this. And I think there will be a lot of thought put into how exactly do we do this and, mitigate the risks associated with it as a plan sponsor.
Shana, I got to say, you're not the only one. I was speaking with the head of private equity at one of the major private capital firms who straight up said private equity doesn't make sense. It's too risky. Maybe something like private credit where there's more liquidity is okay. Is there a real risk that some of these assets get shoved into 401ks? Investors are stuck with riskier assets that they realize. And for your industry, for the alt industry, it all suffers the consequences in things like more regulation in the fallout.
Yeah, so I'm going to say the part that a lot of people don't like to say out loud on national television, and this could be to my detriment, but a lot of bad product is likely to come to the market because this is an easy way to gather assets into product that you don't have to worry about going through extensive due diligence on, and I do feel like a lot of bad product gets pushed down to this market under the guise of you're lucky to be at the table kind of thing. And so that's a big concern for me, the quality of the product that would end up here. We have subscription docs. There is extensive due diligence. That's why my company exists. You want to be careful and make sure that this is a suitability issue. I just don't know that it belongs in a 401k plan. I think there were other ways to gain access to alternatives that made more sense, was more liquid, and was a better intermediate step. Things like access to alternative ETFs, interval funds that invest in VC, private credit, private equity.
Shana,
of that nature. I think that was a better play, but we still don't have, even broad alternatives through mutual funds and 401ks. So I'm not sure how quickly this gets adopted.
Yeah, Shana, I wanted to let you finish because it is bold and we love it. And Katie and I will pray for your inbox. That is Banríon founder, president, and CEO Shana Sissel. Thanks to you so much for joining us.